As discovered by the Financial Brokers Association of Australia, they've just released the 2023 Australian Mortgage and Rental Affordability Survey. Peter White is the Managing Director. Peter, hello, welcome to ABC Radio Darwin. What was the most shocking discovery from this survey of mortgage holders and renters?
Yeah, thanks, Adam, and good morning. I think one of the impacts that we see that is a real standout for me is how much people have stretched themselves and hopefully not gone beyond that to actually keep their mortgage or rental payments going. And, we see that, so many people have cut back on, what they spend on groceries every week or even going on leave and social activities. Huge amounts of people have cut right back on that, as well as those people who have used their funds or looking to use funds that they had in their bank, cancelled holiday plans. There's a whole host of things people have done just to get by, to make sure they keep up with their mortgage repayments as well as their rental repayments. And we looked at this a year and a half ago, crystal balling into the future, and 57% of the people said they couldn't afford a $300 a month or 1% increase in their interest rates or in their repayments. We've gone 3.5 times that somewhere, and we've proven resilient, but the pain's there financially and the pain's there with their mental health as well. We can see that through the data that's come out of the survey.
Yeah, I mean, we heard from the government, we heard from the economists that Australia had more savings in the banks than ever before. Everyone was well ahead on their mortgages during the pandemic because no one was allowed to go anywhere. But of course, that's a story for some people, not everybody, isn't it?
Yeah, that's correct. And there's most certainly some people who are in that boat, but that was fine when we were all in lockdown. As you say, we couldn't do anything. So we were stuck at home and that was it. And I know, and as probably countless of your listeners know, that your friends that have all of a sudden, once we come out of COVID, decided they were going interstate or took that holiday or if we needed to get out of the house sort of thing. And those funds had dwindled. And, with more interest rate rises on the horizon, let's hope today isn't one of them. But if it's not today, there's probably another one before the end of the year. That rubber band of affordability, I think, is close to snapping.
Yeah. I mean, do you think, is the Reserve Bank, are they going to take into consideration, as been discussed widely in the media, that there is a lot of people that are still on fixed interest rates that are going to come off that in the next 2 to 3 months, and then suddenly their mortgage repayments are going to, so in some cases, will almost double. Is the Reserve Bank, do you think, do they consider that in this decision that they're doing today?
One would hope so. Whether they are or not, I guess, is debatable. So we're on that bell curve climb at the moment. So come July is actually the peak of fixed rate mortgages that were taken out 2 years ago. And there's something like 800,000 of these fixed rate mortgages taken out across a period. There's not just one or two of them, but that peaks in July. And so those people, as we know, they had interest rates that started with a 1 or 2%. They're going to have something that starts with a 5 or 6% now, and maybe worse as we get a bit further on. So it's a big jump, and I think the best advice we can give people is be prepared for that. If you're one of those people still to come off fixed rate, be prepared for that, because you need to have those conversations earlier to make sure that you can deal with what happens. And we hope the Reserve Bank are listening to this together with all the other data. We're seeing inflation pull back, CPI is back a bit, unemployment's fairly steady. There's a whole host of indicators that say why you shouldn't, except the one that says inflation's still too high. And that becomes a bit problematic. So I'm usually fairly optimistic on these things and say, well, RBA won't be raising rates this time, but there's a bit of a toss of the coin that they still might, because some of those key indicators aren't supporting the need not to, except market.
Yeah, I know, but, we some of that's got to do with other factors, mining and all kinds of things that aren't the regular mum and dad mortgage holders. It doesn't affect them at all.
Yeah. No, I agree. And from my point of view, I hope that rates don't move. There's just a little bit in the water that says there's still that chance, but if they don't, there'll be another one later during the year, I would expect. But I think there's enough things in the market, and one of the things that we're talking about is that the Reserve Bank needs to pause longer properly look at the impacts of what's already happened.
Yeah.
Yeah, we've seen in the past these monthly jumps of interest rates, and we can all be heroes in hindsight. I said really, we should have started this journey 18 months ago. So I think that, that's looking backwards in history. But they need to pause longer to see what the real outcomes of these things are, because they take months to really flow through. And I'm firmly believe that these things should be given at least a 3, if not 4 months rest to be able to truly assess what that impact is or isn't, and then decisions made in a more informed position from then.
So, Peter White, what's your advice to someone who's really struggling with their mortgage or even their rent? But let's concentrate on mortgage there.
Sure. So it kind of applies to renters as well. The first thing that if you're having problems meeting your mortgage repayments, or you feel you're going to, is to talk to your bank, talk to your lender. And it's the same if you're a renter, you should talk to your landlord. But have that conversation early and prep for it. And it's not an easy conversation. And I know I've been in this game now for 45 years, and it's always a hard conversation for people. We very much understand that. But that is singly the most important step. Is make sure you talk to the lender. And if they can manage a hardship provision for you, so put things in a bit of a hiatus or just go interest only for a while, then that will help you get through that period. And then you need to look at what your circumstances are as to how you best want to restructure what you've got, assuming you can. And of course, that's you talk to your bank. I'd encourage people to also talk to brokers. They've got a much better or much broader spectrum of loan options for you. But have a look at that sooner, not later. Don't leave it till the last minute.
Good on you, Peter. Thank you for your time this morning. Let's fingers crossed there's no interest rate rise today. Good to talk to you.
Agree.
See you.